What is going on, traders? In this video we're going to talk about how to buy the low, but not just how to buy it, but how to buy it as a high probability setup. Because when I started trading, I never believed to these traders that were reliably selling the highs and buying the lows with consistent results. But after almost 8 years of trading, it has become one of my go-to setups, and I think it would be a shame not to share it with you guys. So I'm going to try to explain it to best of my abilities and give you the tips, what I'm looking for. And in the first part of the video, we're going to explain the technical analysis aspect of this, how we recognize this pattern. In the second part of the video, I'm going to show you guys my live trade that I took right here, that I attempted to buy the low. So the first step is when we're picking the top or picking the bottom, and more like buying the bottom or selling the highs, is that we need to identify the market structure, because it needs to be trading range. It cannot be trend, uptrend or downtrend. When the market is trending, we are obviously only sticking with the trend. We don't want to be taking unnecessarily risk to be picking tops or bottoms. We just want to buy or sell the pullbacks and keep going with the flow. So it has to be a trading range, and it is pretty obvious when we first came in and looked at the chart. Market started with the one big leg up, we went into congestion, fell break lower, and prices attempted to make a new extreme. As I came in, this is still pre-market open session. As I came in, prices pushed below EMA and prices are continuing working lower. So this is not a strong uptrend, not a strong downtrend. This is looking like a trading range structure. The second step is that we need to make sure that the downtrend is going to finish, is going to play out, that the current trend is going to finish. And how do we recognize that the trend is finishing? Well, we recognize it by the break of a trend line and a new low, because after trend line will break, traders will attempt to make a new extreme. We have a break right here and prices continue to make new extreme. So as I came in, we pushed below EMA, prices are working below EMA, and take a look how we keep breaking these lows each time. Every single structural low is being broken. So this is a good sign that we are in a downtrend, or we are heading into downtrend. We have a break of this downtrend, and you're most likely heading to this low. This is the close for yesterday. I mean, the close for yesterday is a little bit higher, but I put it a little bit lower because you can see multiple touches right here. So we're most likely heading from one side of the trading range to the other side of the trading range. And the third step when we're buying the low is we prefer it to be a break below a key level, because most breakouts of trading ranges will fail. So it's not bad, it's not wrong to buy the support, but we want to buy it, we want to fade the breakout. We want to wait for the break below the key level, because that's the easiest way how traders can get trapped. And now take a look at this pattern that I'm going to try to describe to you. When we are looking to buy the low, like I already mentioned, the price structure needs to be range, the downtrend need to finish, and we need to break below the key level. We have this strong bearish move down. This is what we see. The stronger the move, the better. I know it sounds counterintuitive. Why would be, wanting to buy after strong bearish move? But we want, the stronger the move, the better it is, because most people are going to get trapped. So what you're looking for is a strong bearish move followed by a depletion candle. Take a look at this doji. This right here is a depletion of this entire move. After that, there will be an indecision phase. Indecision phase is clearly highlighting that the market is depleting the previous strong bearish move. This area right here is the indecision. You guys can see how we're trying to go higher and we're trying to go lower. It's no longer a strong continuation of this bearish move, and we are no longer going higher and breaking above. So this is the indecision after depletion. But more importantly, here comes the most important part that I want you guys to pay attention to, because the whole idea behind buying the low below the key level and fading the breakout is that we want to be on the other side of the traders, of the beginner traders who are getting trapped. Because I guarantee you, so many traders watch this entire downtrend working lower, and they were scared to pull the trigger all the way up here, and they're going to go short below the breakout after all that move happened. And there are going to be a lot of traders who are going to be piling in, because it is a common sense. Market showed you that it's trending down now. This is a common sense, and you don't want to be following common sense when you're trading. So market proven, it's going down. You have a new low right here. This is the low for the day. You have a first entry short, pull back, second entry short. This is a trap because second entry is a high probability setup. We're coming off the EMA. But remember, we broke lower. Most breakouts will fail. It is indecision area. It is looking like it's starting to look like a bottoming pattern, sort of. Failed second entry and a nice bar to go long. So this was my first entry for today. And actually a very similar situation happened yesterday when I was filming the video, is that we have this low right here for the day. Prices were continuing working lower. We have a break and a new low. So the downtrend played out. It is a trading range looking structure. We broke below the key level. We have a strong bearish move down. We have a depletion candle. Oops. We have a depletion candle right here. A little bit of indecision. I pulled the trigger way too early. Looking back in the hindsight, this is the trap I should have been waiting for. First entry short, second entry short. This would be the trap to trap all the shorts going short after all that move happened. Very similar pattern, very high probability. All these patterns will repeat. This was my first trade, and as prices pushed above the EMA and this key level is now holding as a support, the EMA is holding, a potential trend line is holding, and the support is right now holding. So this was my second trade, and I caught quite a nice runner right here. Unfortunately, I got stopped out here. But this is how I'm looking to buy these lows. It is very counterintuitive and it is scary. But when it's a trading range, it is such a high probability setup because so many people are going to get trapped down here. You can almost rely on it. And even though you're close to this EMA right here, the overall context is here so strong that you just have to pull the trigger right here. And prices kept working high. Unfortunately, I don't see really good setups for today. There is a second entry short right here, but you're inside of this trend line. Another entry here, but once again, you're inside of this trend line, so you don't want to risk taking this. First entry right here. Then you're working higher. Here's the first entry long, pullback, second entry long, but bar is way too big. So only you could enter on this inside bar. That would be pretty great entry. Following our rules, because it is a failed break lower in an uptrend. EMA is holding. But you know, other than that, once again, not that many high probability setups. But I'm gonna quit talking. Gorgeous trade today, and hopefully you guys are gonna enjoy the live video. Take care, everybody.